Good morning, everyone. Welcome to our Apartment Insurance Quoting Made Simple webinar. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I would like to introduce Michelle Belden, who's going to be our instructor today. She's our apartment specialist and a commercial underwriter in our office. And say hello, Michelle.
Good morning, everyone.
And then I'd like to also introduce Jacob Cole, who's our lead marketing specialist. And he is always working in the background. You don't generally hear him, but he's making sure that everything's working smoothly. Say hi, Jacob.
Hello, everyone.
Great, thank you. So let's get started and figure out the logistics for today. Pretty much a lot of you will know that most webinars, you'll be muted because there's there'd be too many people talking, but you're definitely going to be able to hear, which hopefully you can hear me now, just not speak. However, your voice is really important to us, so please, as we go throughout this webinar, please pose your questions in the chat room, and we'll answer them throughout the webinar as they come in. Lastly, we have a simple survey at the end of the webinar, and we would really appreciate your feedback. We really pay attention to what you have to say, and would like to know how we're doing, got any great ideas or other webinars that you'd like us to put on. So without further ado, let's move over and talk about the objectives. So there's lots of different types of residential buildings. And so Michelle's going to take the time to differentiate them for you so that you can recognize them when you're out and about looking to write some of these. She's going to go over how to underwrite an apartment building risk, which is important because property is always a lot more complicated than general liability in some ways. And then you really need to know about the property components. It's not just the building, and so she's going to spend a bit of time on that as well. And then how to understand how to prepare a quotable submission, how to get Michelle to give you the quote that you want in a timely manner at a competitive premium. So without further ado, I'm going to introduce Michelle. Take it away.
Good morning, everyone. Okay, so I want to take the time to start just, giving some definitions on different types of residential buildings that there are. So for me and my carriers, an apartment is defined as a residential building with 5 units or more. So that could be made up of multiple buildings. There could be 6 duplexes, so you have a total of 12 units. And if they're all at the same location, same address, then that to me would be considered a 12-unit apartment. And then mixed-use buildings would be, buildings that generally speaking have some commercial tenants on the bottom, maybe a restaurant, some retail stores, things like that, or professional offices, and then have apartment units on top. Sometimes it's 1 unit, sometimes it's multiple units, depending on the makeup of the building and the number of stories. And then the other type of residential buildings are community associations, which could be, single-family homes, condominium associations, where in those cases you have individual unit owners that own each unit instead of one single owner of the entire property, like an apartment is generally made up of only one owner with multiple occupants. A community association would be multiple unit owners making up that association. And then you also have co-ops, and then 1 to 4 family dwellings, which is something that we can consider. Though they kind of fall in a gray area if they could be personal lines or commercial lines. It really kind of depends on who owns the building. If it's used for if it's a personal home, that's not something we do. We don't write any personal lines, so we're strictly here only doing commercial. So if somebody does own a 1 to 4 family dwelling, and they use it as a rental property, whether it's a long-term rental or short-term rental, such as an Airbnb, that's definitely something that we can consider. Guidelines kind of just vary depending on the state. Especially in California, on 1 to 4 family dwellings, there is generally an earthquake requirement. So for market availability, that could vary for us on what we'd be able to offer depending on how the building is made up. But today we're going to stick to mostly apartments, but if you guys have any questions about these other types of residential buildings, feel free to reach out. So as I said, an apartment is, made up of multiple individual apartment units. You can either enter from them each unit individually from the outside, or, they could have a common hallway and then each individual unit you enter to themselves. The only thing is for an apartment to be considered an apartment, they each have to have their own, kitchen and bathroom. There can't be any shared facilities. So if there are shared facilities, such as that's something we would consider as a rooming or a boarding house, which is something that we can consider as well. But that's something that just because of the common shared facilities would go through more of an E&S type market than something like a standard or a preferred market. And then, Anae, can you go to the next slide, please? Thank you. All right, so those are some things about, what an apartment is. Now we want to go into considering what you need to consider in order to quote an apartment. Things to, take a look at when you're working with your insureds. So what we're looking for, regardless of the age of the building, I've written things as early as the early 1900s, to something that was built just this year. What we're looking for are well-maintained buildings. I've seen some buildings that were built, like I said, in the early 1900s, and they've had complete and full updates to the wiring, the plumbing, the heating, and the roof, within the last 25 to 35 years. And, they look brand new. You would never know by looking on the outside that it was built, almost 100 years ago. So what we're after, are those well-maintained properties. That way the insured is limiting their risk, from a general liability standpoint, from a claim standpoint in the event, a loss were to occur. So, the more that they maintain their property, the better off they are, to limit their risk in the event of a claim from happening. And like I said, so we are looking for, on the older buildings, full updates within the last 25 to 35 years. That definitely varies by market, which ones will accept what. But, if they haven't had the updates, that's still okay. We can consider those. Coverage-wise, though, on the property, we'd most likely only be able to offer you basic ACV. So, I know, upgrading an entire property can be expensive for insureds and things like that. So, so at least they are still protected, so they still have coverage. We can definitely look at offering a basic ACV quote if they can't qualify for special form. Some other things to take into consideration is what are their annual rents. I will definitely need that information in order to offer them business income insurance. Which we'll talk a little bit more about when we get to the property guidelines. Vacancies. For an apartment, generally speaking, with my markets, we're looking for 70% or higher occupancy. We can consider ones that are less occupied. That just kind of, we'd have to split the rating out on the GL side, vacant versus what's occupied. But still, again, something else we can still consider. And then are they professionally managed, or is the landlord, the owner of the building, the one managing the property? Either is fine with us. Again, we're just looking for those, people who are taking the time to make sure that their properties are well managed. Another big thing is the number of units. That's the GL rating. So I definitely need that information in order to offer terms. The number of buildings, an apartment can be, like I mentioned earlier, could be made up of multiple buildings at one location, or it could be one building. So we'll look at some examples of buildings and their makeups to just dive into that a little bit further. And then if they have any commercial occupancy, like I said, so if it's a mixed use building, if they do have commercial occupancy, we're definitely looking for, and as far as the rating goes, on the GL side of it, we would need to know, what sort of commercial tenants are in the building and what square footage that they occupy, because that will determine what markets I can go to depending on the types of tenants that are in the building. All right, and some other things to consider are the number of stories. Is it over 3 stories, and then at that point, are these buildings sprinklered? Are they non-sprinklered? On your older buildings, they're most likely not going to be sprinklered. Just wasn't really a thing back then, considering putting sprinklers on a building. Once we get over for like preferred markets and things like that, it varies on if they'll accept non-sprinklered buildings and things like that. I do have markets that, if there's a 3 or 4 story building that's non-sprinklered, that will consider them. And so that's not a problem. So I definitely have options for both. If I'm able to place it with a preferred market and the building is 100% sprinklered, there definitely is a sprinkler credit that we can look into. And then I see we have a question. Okay, is there a TIV cap for each location? So for me, it's going to vary by the market that I can take it to. So, some of my markets cap out at $3 million for some of the smaller things. I have some markets that cap out at $20 million TIV, and then, I can go upwards after that. It just really depends on if I'm able to, what markets I can place it with. So as long as, if the risk qualifies, whatever markets the risk qualifies are that I have available, I'm going to take it to all of them to try to give you guys the best option available.
There's also another question, Michelle.
I see that. Can you write an apartment location with about 50% occupancy and the other half is in the process of being rehabbed? For something like that, it is something that we could consider. It would most likely probably go over to my coworker, Teresa, since they are doing renovations to the property. She handles our builder's risk and projects like that. And so since it is 50% occupied, it would really depend on where they're at in the process of rehabbing the building and how much longer they have on their job and things like that for her to consider. It would more fall on her side of things than mine. Once the apartment is 100% redone, I'm happy to take a look at it that way once it's fully completed. Okay. And then some other things to take into consideration, when looking at a risk is, are the concrete walkways and parking lots, are they uneven? Are there potholes? Are there things like that? You want to make sure, we want to limit the slip and fall and the trip and fall type hazards. So that's why we're looking, for things to be, flat possible, try to limit the building owner's risk. Again, and then the stairways, we're looking for on the railings, anything, we're generally speaking 4 inches max for width, 4 to 6, depending on the carrier. Anything over 6 for sure can cause a problem because, a small child could find a way to slip themselves through that. And then another thing to consider with railings and stairways are if your railing has horizontal railings. Those can cause a problem because they act like a step ladder. So, a small child could decide to climb up it, get to the top, and then fall over. So they, contractors, I've been seeing them on newer buildings putting on there because they look nice. They may look nice, but it doesn't necessarily, fly within insurance guidelines and things like that. If they have a pool, it needs to be fully fenced with a self-latching gate. If it's not, then I'm not going to be able to consider it because my markets won't consider anything that doesn't have where their pool isn't fully enclosed with a self-latching gate. And then are there fire extinguishers attached to the building? Generally speaking, that is a code requirement depending on, each city's ordinances, varies, but that is generally a requirement. And then we do require smoke detectors to be in each unit. And then a big thing now, especially on the older buildings, is the electrical wiring and the type of electrical panels that are present. So if there are Zinsco panels, Federal, Stab Lock Pacific, if there's aluminum wiring, knob and tube wiring, fuses, those aren't things that I'm able to consider with any of my markets just because of the fire hazard that they pose. It's just not something. I know it's an expensive project to update the electrical, but really what we're looking for is the electrical to be on 100% functioning and operational circuit breakers, generally with copper wiring or any wiring outside of, aluminum wiring, knob and tube wiring, things that I listed that would be prohibited. And then lastly, is there a playground or a sports court or something on the premises? If there is a playground, do they have a soft landing underneath it? So it has to be something other than like concrete or asphalt for us to be able to consider.
There's one more question for you, Michelle.
Oh, sure. Okay, yes. So do your carriers schedule values per building or on a blanket location? It varies by market. Some of my markets will offer a blanket basis. Other ones will have to schedule it. So if there are multiple buildings, I do ask for a statement of values, which is something I will have an example of a little bit later in the slideshow that talks about that. But like I said, it's going to vary depending on my market. So if we're able to blanket it, we definitely can. Otherwise, we'll have it scheduled individually. All right, so I talked about, things that make up the apartment. So let's talk about how to determine how many buildings there actually are in an apartment. So for us, any component that's attached to the building, so say they have a fence and it is anchored to the building in some form, that would actually be considered to us as part of the building. Anything that's not attached to the building, say they have a dumpster enclosure or they have other fences and signage, things like that aren't attached to the building, those would be individual things that would need to be scheduled for us to provide property coverage for. And then also, are there attached garages? Or are there standalone garages or carports? If they're standalone buildings, for those, we would need to provide a limit for those as well. So the next couple slides, I'm going to show you some pictures of some apartment buildings just so you guys can kind of get an idea of what we would consider, multiple buildings versus one. So the picture on the left clearly shows, you can see multiple buildings. You can see the separation, the distance in between the buildings. So in that case, this would be like a 6, I'm not counting them, but a multiple building location apartment. And then the one on the right, it may kind of look like 3 buildings, just the way the shape is, but you can see that they're all connected by a common roof. So since they are all connected by a common roof or a common breezeway or something like that, then really this would be considered one building to us, not 3. And then on the next one, just a few more examples. So the top left picture, again, is showing you multiple buildings. The bottom left is showing you that the fence is actually connected to the building, so we wouldn't schedule the fence individually. We would make sure that in the building total, that is also accounted for as well. And then again, with the top right picture, again, you see that this little aesthetically pleasing structure that's connected to the building that's coming off, that's just adding a little bit more character to the property. Again, is connected to the building, so that's something that we would still want to make sure when determining the property value for the building that that's included in the total. And then the bottom right picture, again, you see on the bottom, there's a clear separation of space between it. However, there's that common breezeway that's running across the top of the buildings. So in my eyes, when I would be quoting this would actually be considered one building, not 2, since they are connected. If that breezeway wasn't there, then yes, we would be looking at 2 buildings. Okay, and so back to talking about versus blanket coverage, or if we have to schedule things out individually, would lead me to a statement of values. So a statement of values, as I said, I will definitely need if a location has multiple buildings. If it has like 2 or 3 buildings, you can definitely fit that all onto an Acord 140, no problem. But once you get over that mark, you don't have to keep filling out an Acord. For that, we can use a statement of values. So it provides me with a breakdown of the buildings. Really, I'm looking for the most basic information. I've seen statement of values, or SOVs as I call them, that have all this information under the sun, which is amazing, and then other ones that just have enough information for me to be able to quote, which is definitely something that I can do. So it breaks down the buildings by the number of units, the square footage, and their property values is really what I'm after. And then, anything that needs to be scheduled in addition to the building coverage and other that are tied to the building, we would want to make sure that those components are listed as well. And then I do see another question about Section 8 housing. Section 8 housing is pretty tough for us. I do have a couple markets that will consider it, but it's not something that we're proactively after just because of what Section 8 housing is. It's just not something most of my markets are after. So this is just an example of a simple statement of values. Just an Excel spreadsheet with this information broken down. So, we're just breaking it down by the building, the number of units, total square footage, the cost per square footage, and then what your value is. And then again, like I said, you can list out if they have any of these Other components that need to be scheduled individually, those are listed there as well. Also, a statement of values is definitely helpful if, say, an insured owns multiple locations. Regardless of the number of buildings at each location, a statement of values breaking it down by location per building is helpful as well. All right, so determining the property values for an apartment. This will help me determine, you will need this information obviously to determine what coverages we're able to offer them. So it's going to vary by state, the construction type, your building height, and the building quality. These are all factors that go into determining the cost per square footage, so your replacement cost per square footage. For that, I generally am seeing, for something that's being offered as special form replacement cost, generally for the cost per square footage I'm seeing is anywhere from $115 to $250. But again, it could be higher or it could be lower. Like I said, it just depends on the state, the construction type. Something in California might have a higher cost per square footage, but say you have the same risk in Texas, their cost per square footage is going to be less just because it doesn't cost them as much to rebuild in the event of a loss. So there's, the way I determine to see what the building valuation is coming out to is when I get a submission, I just divide the building limit by the total square footage of the building to see what it's coming out to. And then sometimes, if I think it's kind of low, maybe we missed a zero or something in the number, I'll definitely reach out to you. Sometimes, depending on the market, if they think the cost per square footage is too low, they'll ask me to provide a building valuation report from you guys. So we would just be looking for some sort of like MSB report, CoreLogic. If you are a farmer's agent or another captive agent, generally you have some sort of replacement cost estimator tool. Any of those will work. Just showing the building value that you've come up with is concurrent with a replacement cost estimator. And then, some of our other carriers run their own as well, and sometimes they will offer terms at a higher building limit than what you asked for because they have to meet their own carrier requirements for the building limit. Okay, so let's talk about some of coverages. So, the main coverage for an apartment, I would say, is the property coverage. So your property coverage is encompassing your building limit, your business income, which is your loss of rent. So that's why I need the annual rents in order to offer the coverage. And then, the building owner may have its own BPP. Say they have a pool and they're the ones providing the pool equipment, such as chairs and umbrellas, things like that. So they may have their own BPP. We can include that as well. We wouldn't want to pick up the BPP of any of their tenants, so that would be on them. And then some other property coverages, like enhancement coverages to consider, would be building ordinance coverage, which is we can offer coverages A, B, and C. Just depends on what you're looking for. Most of the time, I'm seeing coverages A, B, and C. And generally speaking, B and C can either be a monoline coverage, or it can be or they can be combined. And then equipment breakdown, generally speaking, is something that is included on most of our quotes. And then we can also, obviously, the general liability is important for them. So we can write the property and the GL as a package basis, or we can write either one of those monoline, depending on the situation with the apartment. Say they maybe had some losses on the property side, and so, it's kind of a struggle to find them some coverage right now. We could definitely look at doing a monoline GL quote and vice versa. So we have both of those options available, to do it monoline or to write it as a package. And then on the general liability side, we also have the ability to add on hired and non-owned auto. And then, if there's an apartment manager and things like that, and they want to have the fidelity coverage, to protect them from any sort of loss of their financials, we can definitely do that. And then we also have the ability to offer work comp for them as well. All right, so just some product features on the coverages available. Like I said, we can offer special form replacement costs on those, buildings that were built within the last 35 years. For sure, we'll qualify for it. Or the older buildings who have had the complete and full updates within the last 25 to 35 years. And then for GL, generally speaking, $1 million, $2 million, is standard for us. We have a couple markets that will offer $2 million, $4 million, but most of them are sticking at 1, 2, which is not a problem. We have excess markets available, so we can definitely look at that as well. And then I know we talked about property limits earlier. Like I said, it varies depending on what state we're in and what markets the risk qualifies for, but we do have options, for the bigger schedules as well as the smaller ones. So it just kind of depends. And then as I mentioned, the older buildings are definitely something that I get a lot of, but as long as they've had those updates, then we're good. Then we can definitely offer them the special form replacement cost. If they haven't, like I said, we can still help them out. Coverage would just most likely be basic form ACV, and it would probably end up being placed with an E&S market instead of a preferred or standard market, just because they haven't had those updates. And then as we talked about, we have different coverages we can add on to create these package policies for you. Okay, so this is just a little risk profile that we created to help you help your insured to figure out what coverages and what information you need in order to put a submission together. So I can't actually quote off of this, but this is definitely something that you can send to your insureds to have them fill out so you can put the accords together for the submission, just to ask them some basic questions to get the ball rolling. It's a great tool. You don't want to spend the 10, 15 minutes to put accords together right then and there while you're just talking to somebody on the phone. You can jot down some quick information and then be able to transfer that information over. So like I said, I can't quote off of this, but it's a great tool to have. And then for a submission, for what I need in order to quote, I really need an Accord 125, 126, and 140. I really need the number of units included because that's what the GL is going to be rated on, their annual rents, so I can offer you the business income coverage, and then any other coverages you're looking to have added on, such as hired or non-known auto, equipment breakdown, any sort of like property enhancement. If there are certain specific coverages you're after, please make sure those are either listed in your email to me or on your submission itself. And then I do need an apartment supplemental in order to quote. We have one available on our website that you'll see, and then, or I can quote off of any other carrier supplementals. Most of apartment supplementals ask pretty much the same question, so I should have enough information to quote off of somebody else's. If I'm missing any information from you, I will definitely reach out to you. I want to be able to provide you with a quote, so if I need any additional information, I will definitely ask you. Loss history. I can quote subject to. However, if you have the loss runs already, that's great if you can provide them at the time of submission. If they've been clean, that's wonderful. If they've had losses, it is still something that we can consider. It's gonna really depend on what those losses were, how frequent they've had losses, and the size of the losses. So, if I get something that it shows me it has losses, then I'm gonna come back to you and ask you pretty much 3 questions. What happened for you to confirm that all damages have been repaired, and then what actions the insured has taken to try and prevent future losses of happening again. So say there was a trip and fall because the sidewalk was uneven. So at that point, we were hoping them as like mitigation for them that they repaired the sidewalk. That maybe they put a sign out or they like put yellow down, something bright to like bring attention to it so that there's something like that. So those are the kinds of things we're looking for, because I do have to tell a story to the carrier in order for them to consider the risk. Things with higher losses, I'm talking like probably over 500,000 or more, depending on what the loss was. Those do become much tougher to consider. But like I said, again, that comes down to the point where, well, maybe they had a property loss that's too large for something that my markets are able to consider, but I can still help you with a monoline GL quote. So, those things do come into play. And then if you have a target premium, that's definitely helpful for me. I can kind of know, what markets I know will be like, should be able to meet that range. And then I can kind of tell you like, hey, the market's hardening in these areas. So I don't know that I'm necessarily going to meet that target. But it's definitely helpful information for me. For loss history, I see your question. 3 to 5 years. Varies by market, so I generally ask for 5 years worth of loss history. That's probably my standard. And then, like I said, we can quote using any supplemental that there is. And then for the Accords, I don't need signatures in order to quote or anything like that. So, just fill them out, forward them over to me, and I can quote. But, if we do get ready to bind the policy, we can definitely accept, electronic signatures, using like a third-party app such as DigiSign or DocuSign, things like that.
And you have one more question.
I see that. Okay. Brand new apartment complexes. It is something that we can consider. 12 for lease, but not occupied. When they are brand new like this, generally speaking, something that's coming just off of course of construction, they're generally looking for my markets. They're generally looking for at least 70% of the building to be leased and occupied within 60 to 90 days of them leaving their course of construction policy and going on to an apartment policy. So it is something that we can consider. It's just going to vary. So like this one you said is 12 out of 30. It's definitely something that I could look at in consideration for you. And
well, thank you, Michelle. That was such good information. I hope everyone enjoyed it. Thank you all for joining us. And if you have any further questions, I think we do have one more question.
Okay, so we are not a market for flood or earthquake insurance, but I can consider high-rise and low-rise apartments. It's just, like I said, it's going to depend on, especially on the high-rise ones, if they're sprinklered or not, will definitely play into a factor on what markets I can go to. But like I said, yes, just no flood insurance is not something that we provide on the apartments.
Okay, great. Thank you, Michelle. So if you have further questions, please put them into the chat room. We'll make sure that we get back to you even if after the webinar is over. But make sure you visit our website, cidinsurance.com. You're going to find all of our applications. You're going to find our upcoming webinars and lots of recorded webinars that you can watch as if you're there right now, and lots of tools and templates for you. We have one more question. Tier 1 TX?
Tier 1 in Texas. I can write it most likely without wind and hail. Texas can be a tougher state for us to write in just because of the wind and hail guidelines. Some of our carriers will only write in the state of Texas if wind and hail is excluded. And I know from speaking with agents in Texas, they can struggle just as much as we can with them even being in the state as far as wind and hail guidelines go. But definitely in Tier 1, I won't be able to offer any wind and hail, and we don't have any sort of like buyback wind and hail option either. So again, that would be a great option for monoline GL if need be, because I do know that, in speaking with agents in Texas, that it can be tough to write the property sometimes because of the wind and hail guidelines.
Thank you, Michelle. So you'll see on the screen if you want to submit those apartment applications that we have one more question. Let's take it. Motels and hotels who rent on a monthly basis, are they a market you would consider?
Right now, I don't really have an option for motels and hotels because of COVID-19. Most of my carriers have issued a moratorium on quoting and binding any of those coverages for that type of risk. So at this point, I don't have an option for those. Hopefully as things start to settle down and, we can try to find a new normal and get back to things. Hopefully they'll open their marketplaces back up on those, and it's something we can hopefully consider down the line.
Thank you again. If you want to reach Michelle with any specific questions after the webinar, it's Michelle at cidinsurance.com, or you see her phone number on the screen. We thank you all for joining us today, and we look forward to doing some business with you, and thank you for the business for those of you that are working with us already. Have a great day, everyone.
Thank you,
Michelle.